Hello, good morning and welcome to ET Now's Buy Now, Sell Now with me, Varun Hirimak, and along with me, Mobina Kapasi. Let's now get a move on and take a look at the headlines this Tuesday morning, and it seems that unfortunately the rally has really fizzled out, Mobina. Nifty is currently at the day's low, PSBs, FMCG, all weighing heavy on the broader benchmarks this morning, and a bit of a sobering day for the markets. Moving on, BPCL has communicated something very important to ET Now. A decision on the 8,000 crore treasury share sale block by October 15th is apparent, and that's got that counter in focus, which we haven't heard much of post that ET Now news break a couple months ago, which Ajay did on that BPCL divestment is actually proceeding according to plan. Next thing we'd like to bring to your attention this morning are some IPOs. We have UTI AMC and Mazda on dockyard, as well as Likita, all hitting the bosses. Not really hitting the bosses today. Their issues are opening. In terms of what's hitting the bosses this week, we'll have two listings this week, Chemcon Specialty and CAMS. Then gloom seems to be ebbing as far as MFs are concerned. The MF sector has added 4.5 lakh folios in August. The sector had added 5.6 lakh investor accounts in July. So maybe a slight moderation being witnessed. 5 lakh in June and 6.13 lakh in May and 6.82 lakh in April. So we just seem to be on a declining trend. If you plot that chart, it's pretty much going to look like this going down. Then finally, gloom ebbing. In some sector at least, we have a glimmer of hope. Real estate, residential sales seem to be recording a big jump. And that's got all your residential realty players in focus this morning. Back to you, Mabina.
Thanks, Varun, for that. Well, those are the big headlines we are tracking for you today, all day on ET Now. But of course, the specialty of Buy Now, Sell Now is our daily quiz, wherein we quiz you on how well are you able to spot the big trends on the Lal Street. So here's our BNSN quiz question of the day. Which one of the following FMCG companies has the highest trailing 12-month or TTM turnover? Is it HUL, Britannia, Nestle, or Dabur? Put your thinking caps on and get voting on what you think is the correct answer. You can do so by logging on to ET Now's Twitter handle. Tweet to us ASAP, and the people who give us the right answer first will be featured as our BNSN quiz champions at 11:45 a.m. Of course, along with the correct answer. All right, and yes, moving on, let's take a look at the equity markets and what they are up to. As Varun said, the rally that we witnessed in the last 2-3 odd trading sessions has definitely fizzled out. Though, mind you, we did see a strong start, in the markets this morning, but now it's, significantly cooled off from the high point of the day as we now are trading slightly in the red. In fact, I would say more or less flattish, really. 0.02% of losses, 11,225 is where we are trading at. But interestingly, we are seeing the stocks, or rather the sector that really did lag quite a bit in the last couple of sessions, taking center stage. So take a look at the metal index. It's 1.4% higher today. Massive momentum being witnessed over here. The IT index as well is gaining a good 1.9%. Energy is higher by 0.8%. I'm seeing some sporadic names in the auto space as well, like a Hero Motorcorp that's managing to gain 2.5%. But otherwise, it's metals all the way. Hindalco 4%, JSW 1.9%, and Tata Steel 1.3%. Remember, like I told you, these stocks had lagged a bit recently, so they seem to be gaining the stage today. Banking, once again, the culprit for the red being witnessed. Look at IndusInd Bank, more than 4% gone for that counter. Axis Bank, ICICI Bank are the other private sector banks that are losing. ONGC, which gained a massive 6% yesterday, is seeing perhaps a bout of correction or profit booking kicking in with losses of more than 2%. Very quickly, what's standing out in the broader markets? Adani Green, what a rally the stock has seen in 20-25% higher today as well. Delta Corp and Kajari are the other gainers, and in the losing side, VI or V or Vodafone, whatever you want to call it, down 6%. Mahindra CIE, Emphasis really being the one IT stock that's not gaining. JB Chemicals as well. Varun is down 3.5%.
Right, Mabina, as you've been flagging off, definitely so many names, whether they be from the broader market or some of your headline stocks, all seem to be headed in a one direction today. So let's see how we pick up. The futures in the US are still positive. Maybe if we see an uptick there, this trend can kind of reverse slightly. But with that being said, let's now pull out the BNSN stock cloud for this morning, and we have 10 stocks that we're bringing to your attention. Beginning with L&T. Now it's interesting, I was just looking at the chart of L&T. It's actually closest to its 52-week low, which is quite amazing considering that it's a very stable large cap stock. Credit Suisse has come out and maintained and outperformed on that counter, and that's actually what's keeping that one in focus. The next, we have 3 insurance companies, and that's on the back of a very optimistic JP Morgan note that talks about non-life versus life players, and it seems that either way or peg, there might be some differences, but insurance is a great sector to be in. Then moving forward, we have a BPCL this morning. Obviously, divestment is back on the cards, and we're getting all kinds of indications that the process is very much on and that it has not turned cold. We then have Cipla that's in there because they got a new drug approval recently, and that's going to augur well for their sales going forward. And Shalby Hospital's promoter holding seems to be coming down there slightly, but it is, I think, higher than the regulatory norm, so I think it's part of just compliance right now. Then we have NHAI because they've won some bids for 2 Gujarat roads, so that should augur well for their revenues. We then have Vedanta because it's got NSE and BSE approvals for delisting. Now the process keeps moving forward. And finally, AMC stocks because UTI AMC IPO opens today, and it seems that private shares are already trading at a 10% premium in the grey market. So that's got your AMC stocks in focus, which were definitely very upbeat yesterday. With that being said, I'm not sure if our guests are ready yet or not, but we're supposed to be talking fundamentals and technicals with Kunal Batra and Vikas Sethi. So good morning to both you gentlemen, and thanks for taking out the time as always. Kunal, coming to you first, you know, this market's so volatile. A couple days ago, we were really deeply in the red, and we had 2 days of cheer, and everyone's optimism kind of came back. Today, again, we're sliding back. So is this something that's going to keep continuing in the markets, which is going to make picking stocks now all the more a selective process? And, you know, while you can share your thoughts on this, please also let us have your high risk and low risk idea for today.
Absolutely. So I think, Varun, you hit the nail on the head, indicating that trading is difficult in this kind of a market scenario. For the last 4-5 months, and I'm talking of the months, I think from the month of May, June, July, August, I think the markets were sailing through some extreme degree of uptrend. There was hardly any phase of consistent volatility. Yes, we had seen signs of correction, but we've not seen such kind of a consistent volatility. Now, start of September itself, there was a clear indication of the markets getting into a slightly choppy mode, and that I say is because of the tilt towards defensives. You had the ITs, the pharmas, and selective FMCG stocks managing to show signs of strength. Now, yes, in the last 2 days, we've seen a ferocious bounce. But then when you look at in the entirety of what happened from the start of September, from 11,800, the Nifty fell to 10,800. So it's almost a 1,000-point fall. Now, in a normal circumstance as well, 1,000-point, any kind of a trend, it generally gets retraced. Now, the first degree of retracement, which we look out for in terms of technicals, is a 50% retracement. So if you look at a 1,000-point fall, you retrace it by 50%, that's 500 points. That comes to almost 11,300. So now we are heading towards the first test of a major resistance, which is 11,300. So far, the index seems to be failing to break above this 11,300 mark. So even though we had a good opening on the Nifty, 60 points, 70 points uptick on the Nifty in the first 15-20 minutes, but it's difficult to sustain. However, I believe that there could be probably a second dash towards 11,300, which could probably re-emphasize that whether this is an important resistance and the markets are now unable to break this resistance, or whether the markets are easy to scale past about this resistance and start a new trend. So I believe that traders should probably try and wait till the end of the day for a second retest of this 11,300. That could determine that whether this is a strong trend in the making or this was just a pullback rally. Now, I would continue to focus on very, very strong stock-specific action, and which is why I would suggest 2 buy calls. But my focus is not on the large caps. My focus is more on the mid caps, because I believe that the indices still have to show signs of confirmation. So 2 buy calls. One on the Bata India. I would place this more of as a moderate risk idea, not as a low risk and neither as a high risk idea. The stock giving signs of a breakout on the indicator patterns. I think there is an Ichimoku pattern breakout, which is a technical indicator breakout on the daily time frame for Bata India, which generally results into a positional rally for stock prices. So I'm expecting the same for Bata India, suggesting a buy with 1500 as a target and stoppers to be kept at 1330. The second would be a buy on Chola Finance. Now this is an interesting chart because I think 2-3 days back the stock had given a golden crossover breakout. It's a crossover which indicates 50 DMA crossing about the 200 moving average. So would suggest this as a buy on Chola Finance. I would place this more as a high risk play. Targets to be kept at 260 and stop loss at 238.
All right, thanks for that, Kunal. Hi, Vikas. Morning. What's on your radar as far as high risk and low risk ideas are concerned?
Good morning, Varun. As far as my ideas are concerned, they are normally long-term ideas, and I think one should be betting on fundamentally sound quality mid-caps at these levels. And if you stay put with them for the say next 9 to 12 months, I think there's a lot of money to be made. The first stock which I would like to recommend to investors today would be Indian Energy Exchange. It's a great company, it is India's first and the largest electricity trading platform. It has close to 95% market share. It's like more or less a monopolistic business in India, and it has got pretty solid fundamentals. If you look at its operating profit margin, they are close to around 89%. The return on equity is around 45%. It's a zero debt company with, and the company has been growing since last 3 years. The PAT has been growing at a CAGR of close to 20%. You've got pretty marquee investors invested into the stock, the likes of Fidelity, Mirae Asset Management, Nippon AMC, SBI Life, ICICI Pru Life, and even MIT, Massachusetts Institute of Technology, owns around 2% in the company. Then they have an investor in the name of Dalmia Cement, the Dalmia Bharat Group, which owns 10%, but recently they increased their stake by around 2.3, 2.4%. At levels of close to around 207 rupees, and that was about 7 to 10 days back. So I'm pretty bullish on the stock. I see tremendous opportunities for this company going ahead, and I think NSE's IPO also would be a trigger for all these listed exchanges. So I would recommend a buy on the stock at the current levels of close to 200, and my targets in a year's time would be 300 rupees. The second stock which I would like to recommend would be a cement stock. The name of the company is Heidelberg Cement. It's an MNC company. Parentage is German parent. The company trades at pretty reasonable valuations. If you look at the PE multiples, it trades at close to 15, which is pretty low when you compare it with its peers. The company has pretty solid fundamentals, ROE of around 19%. Its debt equity levels would be around 0.33, and the company has a pretty solid EBITDA margins, and the company has also been undertaking cost-cutting measures which would lead to an improvement in margins further. So I'm, as it is bullish on the cement sector, and from the cement space, I think Heidelberg could be one mid-cap company which one should look at. So I would recommend at the current levels of 180, and my targets in a year's time would be 250 rupees on the stock.
All right. Well, that's, of course, Kunal and Vikas talking to us about their market view as well as their top picks. Just a reminder for all our viewers about our BNSN quiz question for today. We have asked you which of the following FMCG companies have the highest TTM or trailing 12 months turnover? Is it HUL, Britannia, Dabur, or Nestle, or Dabur? You can tweet to us with the correct answer on ET Now's Twitter handle, and we will reveal the correct answer to you at 11:45 a.m. as well as, of course, reveal who are the individuals who got the answer right. For now, quick break right here on the show. Don't go anywhere though. When we return, we will be answering the questions and queries we've received from you on your individual stocks with Kunal and Vikas. Hi everyone, and welcome back. You're watching Buy Now, Sell Now on ET Now. Well, as promised, we're going to answer the questions and queries that you have sent us with respect to stocks that you already own or are interested in owning. So let's get straight to that. Like I told you, we have with us Kunal Batra and Vikas Sethi to help you out. Let's take on board our first question coming in from Payal Vora. She writes in to us from Pune saying that she has purchased, or rather she wants to buy 500 shares of Tata Consumer at the current market price, and she wants to know both the long-term as well as the short-term view. Tata Consumer has been that one counter that's really rallied in the last 6 odd months. It's at 510 rupees compared to, just that 250 and 300 odd rupees that it was trading at for the most part of last year. So yeah, it's seen a nice rally come by, and after very long in these last couple of months. So Kunal, first, your view, is 510 a good price to buy in? Do you foresee maybe further room for rally here?
So I think I'll answer it in a very simple manner, Mobina, that yes, the stock is something which you should definitely hold on for long term. So long term wise, I don't see any reason why you should, reconsider your decision. Purely in terms of price points, now that you've decided the quantity, how much quantity you're wanting to buy on Tata Consumer, I will give you just two entry points. One is that 50-day moving average. Now, apparently, the stock has just come back to its 50 DMA. This was at 500 or 505 levels on the stock price. Stock is at 510, the current market price. So very close to the current levels is where the the first level of strong support is. Now the stock has a tendency. If there is a short-term correction, I would say a mean reversion, then it tends to touch back to its 50-day moving average and then manages to resume its uptrend and move up higher. But if the correction is of slight higher degree, then the stock at times has a tendency to come back to its 200-day moving average. Now, so 500, 505 is the first level of support. So probably you can buy 50% or 40% of your expected quantity what you're looking to buy at the current market price. And if there is a second leg of correction assuming in the markets, and if the stock comes back to a 200-day moving average, that's where I believe you should probably try to purchase your remaining quantity. That I believe could probably come back closer to 450, 455-ish kind of levels, on Tata Consumer. So long-term wise, definitely a good buy. Price points, the first tranche which you can buy it's approximately at current levels, and the second tranche which I think we should be buying should be at around 450 levels.
All right, so that's a strategy coming in from Kunal for those individuals who would like to buy into Tata Consumer and how you can essentially pace yourselves. Vikas, what about you? Tata Consumer, of course, had that big rejig come by about 2 years ago. It's going to become a proper foods company now. It already is, in fact, after it took over the foods business from Tata Chemicals. But it's only in the last few months that we've seen traction come by in the stock. Do you believe that this is a stock for a good long-term hold?
Yeah, Mobina, it's a pretty good, solid company with pretty solid fundamentals and can be accumulated at the current levels on a staggered basis from a long-term point of view. I think that we could easily see levels of around 650 rupees on the stock in the next, say, 1 year or so. Fundamentals look pretty good, and it also owns the coffee chain Starbucks. And with the news yesterday that Maharashtra is going to open restaurants from 1st of October, I think there could be some traction in the stock in the very immediate short term also. But even otherwise, it's a good company. Tea prices are also on the high, and fundamentals look pretty good. So I would recommend buying into the stock at the current levels, and also keep it as a staggered buy and buy it on every decline, and so that your cost of acquisition comes down. And I have a target of around 650 in the next 1 year or so.
Okay, thanks for that, Vikas. Let's move forward now to query number 2. And it's revolving around metal stocks and as more of a sector view rather than a stock-specific view. But Sandeep Patni of Delhi has written to us, is the time ripe to invest in metal stocks? Please suggest best bets from a long-term view. So Kunal, which 2 charts, if you had to pick out of the entire metal basket, would you recommend to Sandeep?
Recommend 4 stocks, and the viewer can probably select any 2 of them, or depending on the risk appetite and the criteria of the investor, whether it's the extreme high risk which he wants to take, or whether it's the moderate risk to stable kind of stocks, even in the metal pack. Now, whether it's a good time to invest in the metal stocks from long term. So there are 2 important trends which one has to watch out for. One is on the dollar index, and the other is on the commodity prices overall. Now we've seen many of the commodity prices in the last 6-7 months have gone through a very steep kind of an uptrend. On the other half, we've seen the dollar index going through a correction. I think the correction started from 103 levels for dollar index, and we were at one point on the verge of breaking that 90 level. Right now, however, we are seeing a bit of a bounce on the dollar index. But I believe that if the overall patterns for dollar index is something to go about, there could be one more round of a downward trend, or maybe a sustained downtrend which could happen for the dollar index. And I think that could probably be a trigger for these metal stocks to continue to perform higher. So long-term wise, I believe that yes, these are good sectors where you can start chipping on and probably try to add on from long-term view. Now, which are the stocks which you can concentrate upon? I would say that place it into two baskets, particularly one on the large cap front and the other is on the mid cap front. I don't think that you should probably venture out into the tier to mid caps or the extreme small cap names, even though these stocks are maybe single two digits and probably maybe looking attractive. For in terms of price points, but I think there has to be a certain set of safety and cushion as well, which you have to build in. Now, Tata Steel and JSW Steel are the two stocks which you should concentrate on the large cap front. JSW Steel, we've seen a ferocious and a very sustained uptrend for the stock price. Tata Steel, however, has gone through a bit of a chop and churn. So it was a late starter in terms of rally or pickup of rally in the metal pack, but nevertheless, the stock is trying to get back into get its mojo back. So I think these are the two stocks from large cap. You can probably pick either one of them. And from the mid cap front, I think I would probably place Hindalco in the mid cap category, and then JSPL or Jindal Steel. I think both these stocks also look attractive. JSPL, the only concern is that it's an extremely high beta stock. So the stock would have a tendency of moving 25-30% in either kind of a direction. So if you have a higher risk appetite, then probably look at JSPL. But if you have a slightly lower risk appetite and you don't want to digest these kind of volatility, then you can probably go to look at stocks like Hindalco. So this is what I would ask the or suggest the viewer to try and bifurcate in terms of the metal stocks.
Okay, thanks for that, Kunal. So many options within metals from what I understand. Tata Steel, JSW Steel on the larger front. You can look at Hindalco or JSPL as well. So quite a few options for Sandeep there. Vikas, let's bring you on. What's your take on metals, and do you concur with the same view, or do you have some overlap with what Kunal is suggesting, or do you have different picks?
Yeah, Varun. Actually, first I would like to talk about the sector. The sector had witnessed a massive carnage over the last, say, 2-3 months. And from there, from the lows which it hit, multi-year lows, most of the metal stocks had hit during March and April. From there, they've seen a sharp recovery. They've done well. But then I think there's a lot of steam left. And from here on, I see pretty good upside in these metal stocks. As far as my picks are concerned, from the frontline metal counters, I like JSW Steel, as Kunal had also recommended. And in this stock, promoters have also been buying regularly from the open market, which adds to the confidence in the stock. And the other stock which I would like to recommend would be in Hindalco, which I like. I think it's showing pretty good momentum also, and the fundamentals also look good. So these are the two stocks which I would like to recommend. And if one were to have a pretty short-term view, I think Vedanta at the current levels also can be bought into today. They've already announced their deadlines for the delisting offer, which they are coming out with. So I think at the current levels of around 140, one could, from a pretty short-term point of view, buy into the stock. And I expect the delisting price to be somewhere close to 155, 160. So in the next, say, 15-20 days, we could see 10 to 15% upside from the current levels. So that would be one stock which one can look at from the short-term point of view. And from the mid-cap category, I've always been liking Midhani, which is Mishra Dhatu Nigam Limited. It's a PSU metal company which is into specialized alloy steel and which goes into aerospace and defense. So, and the company enjoys pretty solid margins because they operate in a niche segment. The fundamentals look pretty good. So at the current levels of around 200, one could be looking at Midhani also from a long-term point of view.
Okay, so Vedanta, but of course from a pure short-term point of view, and Midhani are the two stocks Vikas is flagging off as counters you could look at within the metals pack. Very quickly then, let's move on and take on board our next question. MS Shirasangi from Bengaluru writes that he bought 2,000 shares of ITC at 188 rupees a piece, which he bought at around 5 months ago. And now he wants to know that post this entire news with respect to, this loose cigarette ban, which by the way is limited only to Maharashtra for now, should he exit this stock? Well, he's losing money here because the stock is now at 170 rupees. Kunal, we got this query yesterday as well with respect to an ITC. Would your view be any different? Since our viewer is losing money, he's at 100. He bought it at 188. It's currently at 170.
So I think the view remains same. Largely, Mubina, I think the stock, is a good quality buy from a long-term view. And the best part about the viewer is that he's not bought it at those higher prices of either a 250 or a 300, where ITC had been trading since last 2 years. It seems to be that's a very recent purchase which the stock has done. Yes, on the news flow there has been slight bit of volatility. Yesterday the stock was up 3-4%. Today I think the stock is down 2.5%. So these are mild bit of volatility in the stock prices. When I was looking at the charts for ITC, there's something which is very intriguing which came across. On the daily time frame, the stock has neared its major oversold territories when it was at 160, 165. In fact, last week as well, I had actually suggested a contraband ITC, expecting that this 160 and 165 territory would actually hold on to be a good support level, and you could see a gradual bounce shaping up. So I would suggest that the viewer should hold on, to his investments on ITC. And I think that if the stock comes to a 160, 165 zone, I think look to average further. Try and bring your cost price to much lower if you try and average it out at those kind of support zones, because I believe that the stock is now hovering around the support territories, and whenever we've seen that kind of a scenario, I think it's just a matter of time that eventually the trend picks up for the stock like ITC. So I would suggest to hold on ITC from a longer term view specifically.
Okay, so that's of course then the view coming in on an ITC from Kunal. Vikas, what about you? Anything that you'd like to recommend? But clearly the way looking at his buy and sell pattern, it looks like Mr. Shirasangi is more of a short-term investor.
Mobina, as far as ITC is concerned, it's been a great underperformer contrary to popular expectations. The fundamentals look pretty good, but the stock has not performed at all. And its peers have done pretty well when you compare it with ITC. And the recent news regarding banning of sale of loose cigarettes could be seen as even positive for ITC, because I feel smokers, their habits would not die down, and once they don't get loose cigarettes, they might buy a full packet, or the company could come out with smaller packets of, say, 3 pieces or 6 pieces. So I don't think that could be a major dent as far as the company's performance would be concerned. But so at the current levels, the valuations look pretty attractive. If one has a clearly 1 to 2 years point of view, I think from the current levels, this stock can see substantial upside, because valuations are pretty low and fundamentals look pretty good. So I would recommend a hold on the stock, and I think as recommended also by Kunal, if the stock comes down to levels of around 165, 160, he could add some more and stay invested in the stock.
Okay, well, there you have it. That's the questions, that's all your questions and queries on individual stocks answered. Kunal and Vikas, many thanks for joining us today on Buy Now, Sell Now. We will take a very short break on the show. Don't go anywhere.
Hello and welcome back to Buy Now, Sell Now. Let's once again, as we have just 5 minutes to go, remind you of the quiz question for which we'll soon be providing the answer. Which one of the following FMCG companies has the highest trailing 12-month turnover, which, if you guys don't know, turnover just means sales. So HUL, Britannia, Nestle and Dabur, those are your options available. So please keep tweeting to us on the ET live handle or Buy Now, Sell Now. And if you are one of the correct responders, your name will be featured as well as your handle on your screens. So please keep tweeting to us. You have 5 minutes to go to get your answers in. With that being said, let's also get a move on. Earlier in the day, we spoke to Sanjay Mukhi of JP Morgan and tried to understand the sector performance across sectors, really, from his view. Let's listen in.
I think from a stock selection point of view, we kind of argued vehemently that momentum, but not momentum in stock price, momentum in earnings, right? Where is the company which is causing surprises on its earnings, which is delivering, let's say, better than expectations? And that's the filtering criteria I'm going to use from a 12-month investment horizon. Okay, so stock price momentum in itself, I don't think has any signaling power. Earnings momentum matters more. And this again, I said this earlier, but it is irrespective of the entry valuation. So you may have a very expensive consumer company, but if it's still going to deliver good earnings momentum, the stock will probably continue to do well. Whereas a very inexpensive infrastructure stock, which does not have earnings momentum at all, may continue to languish for some time. So from a, let's say, shorter term 12-month horizon, key mantra has to be try and pick or forecast companies' earnings delivery and earnings momentum. With that sort of a criteria, we are overweight banks and IT and underweight the consumer discretionary space. we have some staples overweights as well.
All right. Well, let's move on and talk about stocks in news. L&T is a stock in focus. Credit Suisse is bullish on this cap goods major, but again, stocks like an L&T, SBI, these are always on the bullish side of things usually when it comes to brokerage recommendations. Nevertheless, Avan Dabash is joining us today to talk about why and what really is the rationale behind this bullish view by Credit Suisse. Avan?
Well, Credit Suisse is certainly optimistic on L&T. They maintain an outperform with a target price at 1150 rupees per share. Now, essentially, they're saying they're trying to contextualize the underperformance in L&T with one of the possible reasons being the increasing value of subsidiaries driving up the holdco discount. They believe that the stock can see upside even if they build in a 50% holdco discount from the current 25%. The tender activity does seem very resilient and has recovered from the sharp decline that was witnessed in the months of April and June, and this bodes well for L&T's order recovery for the year ahead. Defense, while it is a small component of the business, just about 2.5% of the consolidated revenue, some restriction in specific mandates may be limitizing their participation in holding value discovery. They believe that they will see sector as well as geography diversification, strong growth in the balance sheet, the track record which looks steady, as well as normalization of a lot of their which will boost prospects and attractive valuations for the company. Although they have said that the downside risks do remain the weak cycle, particularly in the Middle East, as well as the government finances and project issues in terms of compensation and costs.
Okay, thanks for that, Avan. It is 11:45, so you know what that means. It's time to give you the winners of our PNSN Quiz Connect for today. So once again, if you haven't heard it already, the question was which FMCG company in India has the highest sales over the last trailing 12 months? HUL, Britannia, Nestle and Dabur were your options. Now there's a clear-cut winner. It's HUL. They outrank them by almost 3x. They do in a quarter what these companies probably do in almost a year. So HUL around 40,000 crore sales a year versus Britannia, Nestle, Dabur of around 10k average sales. So our winners are Prachi Tripathi, Mr. Vijay 69, and then Yogisha K. They all got it right. They all guessed Hindustan Unilever. So well done. You can definitely pat yourself on the back for that one. On that note, let's also slip into a quick break here and Buy Now, Sell Now. Plenty lined up when we come back.
Okay, welcome back. You're watching Buy Now, Sell Now on ET Now. Divestment process is fully on track, but some formalities are taking time, says BPCL's top management to ET Now. The company plans to transfer 2% of the 9% treasury stocks to a new trust for ESOPs, and the remaining will be sold as a block deal. Listen in to this exclusive conversation.
A portion of the treasury stock of 9.33% we hold will be transferred to a new trust for the benefit of the employees, which is 2.33%, subject to an approval today in the AGM. Results are awaited. By the evening, the results will be known. Okay. So 2.33% out of 9.3, 2% out of 9.33 will get transferred to an ESPS trust, okay, which has been formed for the benefit of the employees. They will get the shares at a discount and the loss will be borne by the company. And for the remaining 7.33%, we are ready to take a decision. The decision will be part of the RFP. And if the RFP is going to come out by 15th of October, the decision will be known. If the government's intention to close the expressions of interest on 30th September is holding, we can expect a decision on the treasury shares by that time, by 15th October or so. If it is delayed, I do not know whether it is going to be delayed, but if it is delayed, it will be forming part of the RFP.
Sure. Okay, great. So just one more question I have, follow-up. Have all the queries of the probable guys actually been solved, the probable potential suitors? They must have raised a lot of queries from the operational management, which is you, while doing their due diligence. Have you provided all the queries?
Yeah, all the questions of the potential bidders have been answered. Since the DIPAM process is slightly tedious, it required some of the questions, and some of the questions were to be issued in the form of a corrigendum, which required approvals at the very highest levels of the central government. That was why it took some time. But as of now, all the queries of all the potential bidders have been answered, and it has been published in the website.
Okay, on that note, completely out of time here on Buy Now, Sell Now. Thank you so much for tuning in. Keep it with ET Now. Markets at noon coming up shortly.